Let's welcome in our morning guest at this moment. Sajiv Dhawan is with us. Sumit Bagadia as well as Mayuresh Joshi is joining us. Sajiv, let me come to you first. Do you think the geopolitical tensions that have spiked this morning would have a big impact on flows into India?
Morning. Well, it's too early to tell. It can be a good excuse for some profit taking and maybe some short selling positions to be built in, but it's a fluid situation. The next 24, 48 hours, as has been mentioned, is very crucial. It will give some nervousness to the bulls, obviously. Domestically, everything's fine. The markets were inching up and moving to new highs every day, and the momentum is certainly on the side. If you're a bit more optimistic that this situation will blow over the next couple of days, then today's fall, if it lasts, will be a good opportunity to probably buy domestically. We've had the Rbi policy out of the way, and all eyes will now be focused on the results. So the trend on the Nifty won't be broken just yet. 192.10 on the futures. You might see some more aggressive short selling or some stop losses getting triggered. So I think it'll be a very cautious day. A bit of nervousness will be there. Certainly you should keep your stop losses in place, but if you have the longer term view on India, then you would probably use any correction as an opportunity to buy into stocks which you might have missed out on over the last month or two.
Right. So say if there is a correction, what would you buy?
Well, same stocks which we're bullish on, whether it's Reliance in the housing finance sector, LIC, Dewan Housing, M&M Financial. I think we discussed them on your show before. They're showing a lot of strength. Valuation, the housing finance, maybe not cheap, but there's still a lot of positive momentum behind these stocks. There's still some good side. Metals have had a good run. They continue to be firm. And some other stocks, if we're looking at Tata Chemicals, we like. BHEL has had a very good run up. It's across the board. The only ones which we're still a bit cautious on, it would be pharma and IT. But the rest of the market is showing a lot of strength, and that's spreading to mid caps. Valuations, Pankaj, are not so cheap. The Nifty at its current all-time highs, but is getting there. So that could be another excuse for some profit taking if the results are not good. It's the mid caps where I would be a bit more cautious, and you probably lighten up a little bit if I'm just playing on the momentum and without any real fundamentals. But I think stick to the large caps and the next top 50, 100 mid caps where and you know if there is any correction that some buying support will come in at lower levels.
Right. Sumit, what will be your top picks?
Hi, good morning, Pankaj. Well, we have few picks for the day and all are on buy side. We feel that markets are positive, and from lower levels we will see a good pullback, and overall we are expecting market to move up only. So our picks are, first one is from cement space, and that is Ambuja Cement. I think Ambuja Cement is strong. Yesterday we saw a good move in last couple of hours. Now looking at the momentum, it seems that from here on we can see a good upside move in which we can see levels of around 260, 270 as the immediate target for Ambuja Cement. So for a trading perspective, one can initiate long positions in Ambuja Cement at CMP with the stop loss to be placed at around 235 levels on lower side for the immediate upside till 260 levels, and then we can see move till 270 also. The second pick for the day is from oil and marketing space, that is BPCL. BPCL is looking good on charts. From past couple of days we have seen that the stock has been consolidating in the range, and now it seems that from here on we will see a rally in which immediately on high side we can see levels of around 670, 680 as the immediate target for the counter. So for a trading perspective, one can initiate long position in BPCL at CMP with a small stop loss to be placed at around 630 levels on lower side for the upside target of 670 and 680 levels in next couple of days. The third pick for the day is Bajaj Auto. Bajaj Auto, after a correction, now it seems that from here on we will see a pullback rally, and then overall we are expecting it to move up till 3000 levels. For a trading perspective, one can initiate long positions in Bajaj Auto at CMP with a stop loss to be placed at around 2750 levels on lower side for the upside target of 2870 and 2900 in next couple of days.
Right. Sumit, you said that your overall view on the market is that it will go higher. What are the levels for Nifty to watch out for, beyond which these calls would not be valid?
Yes, absolutely. See, overall levels, markets are looking positive till the time levels are not taken away on downside. The downside support is placed at around 9200 levels. If by chance 9200 is taken away on closing basis, then there is a possibility that we might see a fall of around 100 to 150 points on Nifty but still the overall stance on Nifty would be positive. If such correction comes in the market, that should be used as a buying opportunity. At the same time, on higher side, 9300 will act as an immediate resistance for Nifty. As soon as 9300 is taken away, we will see extended rally in the market, in which we can see levels of around 9500 soon. So I think any dip in Nifty should be used as buying opportunity. As far as my calls are concerned, I think in any of the calls which I have given, in all three calls which I have given, if there is any dip from present levels, then that should be used as a buying opportunity. On lower side, we would suggest buying in most of the stocks.
Mayuresh, what are your top picks?
Morning, Pankaj. So the long-term view of the market does remain positive from our side. And largely, I think the financial space is something that I'll still remain optimistic about. Whatever has been recognized in terms of asset quality for the better part of the last fiscal, I think the pain probably would not exist and persist as credit growth starts resuming in the system. So corporate-facing banks like ICICI, Axis is something we continue to like. The larger retail-oriented ones like NIES and IndusInd is something that we still recommend to hold on because of the store dynamics and the strong operational parameters that they're exhibiting. And SBI from the large cap space. From the auto universe, Maruti is something that I'll still continue to hold as the long-term prospects seem very, very robust for the company. The cement space is something that I'll remain extremely optimistic about, along with power transmission, power EPC. And from the mid-cap universe, stocks like Amara Raja Batteries is something where I feel the underperformance has been there for a length of time because numbers are not coming through. As volumes start picking up both on the OEM and the replacement side of the business, margin should start picking up, giving leverage on their balance sheet. So Amara Raja Batteries from the mid-cap space is something that I like. Navkar Corporation looks like a very reasonable bet as GST start getting implemented and they start getting market share gains with their Vapi ICD coming through, the logistics at Vapi and the rail connectivity, giving them the market share gain in terms of the TEUs that they'll probably manage both in terms of the export business as well as the South Gujarat bulk commodity business that they were probably not able to cater to at this point of time. So I think selectively, I think one must have a stock-specific approach in these markets, Pankaj.
Right, stock-specific approach is the one that our guests are recommending. Let's talk about the RBI policy. A day earlier, where the RBI decided to leave rates unchanged, but the LAF corridor was narrowed down. Now, Citi is saying that the RBI policy and the move is likely to push up the yields for some of the T-bills. The policy reaffirms RBI's view to keep the rate on hold for a long time. So they're not seeing rate action anytime soon. Morgan Stanley is saying that they expect the RBI to take measures to manage liquidity and they see potential for a rate hike, not a cut, a rate hike in the second half of FY18. Nomura is saying that they expect rates to remain on hold throughout 2017 and 2018 as well. They expect a CRR hike in the second half of 2017.
Right, we should just get the market reaction to what has happened overnight in just a bit. I think in the next 5-10 seconds, okay, there is the opening for you. So about 38 points down, exactly in line with what SGX was indicating. 9,219 was what was indicated, and that's, I think, broadly where the markets are starting. So in no man's land between the first and the second level of support. BPCL on your screen is at 664, about 1 rupee on the lower side. HDFC Bank is down 3 rupees. Asian Paints is down 10 rupees or so, and ACC is down about 1%. Hero Motocorp is down 10 rupees, 0.3%. Dr. Reddy's is down about 16-17 rupees. Aisha Motors down close to 0.3%, and Idea Cellular is up. Remember, Reliance Jio has taken over the freebies, and that's positive for Idea and Bharti. That's Sun Pharma for you. It's down 1.4. There is no news flow regarding any names, but I think markets are just seeing a sell-off, and that's why these large cap names are seeing some amount of pressure. That's Adani Port down about 1.4, 1.5%, about 351 as far as Adani Ports is concerned. Bharti Infratel is 2 rupees down, 337, 338. Not much in terms of movement right now. Tata Motors is down 1.2, 467. Axis Bank is absolutely flat, and Tata Steel is flat with a positive bias. No major change as far as Tata Steel is concerned. Mindtree has gone ex-dividend, but I think it's not much. So it's 2 rupees ex-dividend, 2 rupees is a decline, so not much that you can actually read into it. DCB Bank is looking to raise funds, but again, I don't think markets are reacting. 9,000 shares traded, 169 for DCB Bank. Deepak Fertilizer has done a small acquisition, so it's up around 5 rupees. It's up around 2% or so. Data Dynamatics Technology, let's look at that. Dynamatic Technology is up 5%. It's up, but the volumes are just 349. So just let's wait for the volumes to pick up. GE Power is up 1%. They've bagged an order worth 250-300 crores, 606, 607 for GE Power India. SAIL absolutely flat. They've given a guidance that FY18 volumes will be better than FY17. That's what their initial estimates are, but no major changes. Dr. Lal, as per news reports, is looking to take over a company or looking to grow via acquisition, but again, no major movement, about 1,000 shares on the lower side. Reliance is down 1.5%. Reliance Jio has been asked to withdraw their summer offer. Markets were betting big on this, but I don't think that it changes anything much from a long-term perspective. Anisha, any other names on the volume side that you can pick up?
Well, some of the heavyweights are down, Pankaj, on volumes also, like Reliance, of course, is down about 1%. ITC is also down 1%. Then some of the real estate names like Indiabulls Real Estate, Unitech, they're seeing cuts coming in 2% to 2.5%. And this is what is dragging the markets down at this point of time. You mentioned the telecom names, so Idea and Bharti have moved up higher. On volumes, we are seeing some action in Gammon India as well as Gammon Infra projects. So both of them up 2.5% to 4%. MEP Infrastructure Developers up nearly 4%. And we have the likes of Punch Lloyd also up about 1%. Sajiv, what would you do with the telecom pack, Bharti and Idea? Idea has really come off from the highs post the announcement of that merger. Do you think these stocks offer any value at this point in time? Would you look to buy? Do you think competitive intensity should come off slightly going ahead?
Not really. I think our strategy on Bharti in particular is to either short 380 or look to sell the call options. I don't think there's any really significant positive news flow that can come from Bharti. The competition is too intense. The fact that Reliance has drawn this offer, okay, you have a knee-jerk reaction, but it doesn't mean that the problems are going to be over for Bharti. Idea, as we've seen after the merger, the stock has sort of become very steady. So our call is, if you're playing the telecom sector, you'll have to either be very patient for some significant correction prices, which means at least another 10-15% before, in my opinion, offer some reasonable value. Otherwise, we would, like I said, look to sell the higher call options and collect the premiums every month, because I don't see these stocks sustaining higher levels, even if the markets move up or even if there's some short-term positives. And I think and the management talk for this quarter's results will not be as optimistic as even after whatever Reliance has withdrawn these offers.
Right. Sumit, yesterday we saw a strong move coming in Tata Steel towards close. It's still trading above 100 rupees a share. What's your call on Tata Steel?
Well, Anisha, Tata Steel is looking good on charts. We feel that from present levels, we can see a good upside move in next couple of days or probably next couple of weeks. We feel that if there is any dip from present levels in Tata Steel, then that should be used as a buying opportunity. In fact, if anyone wants to initiate a long position at CMP, then they can go ahead and initiate the long positions at CMP too, because overall the structure is looking very good to me. And we feel that steel and metals are looking good for next couple of months. I think one should initiate long positions in Tata Steel at CMP. And on downside, if anyone wants to maintain a stop loss of then they can maintain stop loss of around 480 or 475 levels on lower side for the upside target of 540, 550 levels in next couple of weeks. For a trading perspective, immediately 510, 515 can be target in Tata Steel.
Right. I just wanted to highlight about Shobha Developers. It's been a stock which is in focus, and there is a big 4% block deal that has happened right now. It's up 2% around the 410, not breaching the highs of day before yesterday, but volumes are also picking up. So Shobha Limited, you have seen it's up around 2.7. There is a big block deal that has happened on Shobha Limited. It's a stock which has done well. This is on NSE, on BSE the deal has happened, so that's where the volume reflection would happen. But still the volumes are much higher than averages. It's looking strong in terms of even volumes on NSE right now, about 1.7. Okay, that's the BSE block deal that I was talking about. 4.2 million shares traded, 42 lakhs versus about 3,000, which is generally the average. 410, that's where Shobha Limited is right now. Sumit, you mentioned about BPCL in your top picks. It's doing well. But, even names like IOC, HPCL are seeing some action today. So all the three oil marketing companies are looking strong?
Yes, absolutely, Pankaj. All the three oil marketing companies are looking strong. We are expecting a good move in oil marketing companies in next couple of months. BPCL, HPCL, IOC, all are looking good to me. In fact, as far as IOC and HPCL is concerned, we are expecting a move of around 8 to 10% in IOC and HPCL from present levels. IOC is quoting at around 388 levels or so. I think immediately a small resistance is placed at around 400 levels, which is also a psychological level. As soon as these levels are taken away, we will see a move of 40 to 50 points. That means on higher side, we will see levels of around 440, 450 as an overall target for IOC. As far as HPCL is concerned, we are expecting it to move up to 580, 600 levels in next couple of months. So any dip in these stocks from present levels should be used as buying opportunity. In fact, one can initiate long positions at the current market price also.
Sajiv, what will be your view on real estate companies? Do you think real estate stocks are in a bull market? Any positive news flow that comes in and you see reactions of 5 to 7%?
I think that's the worrying part of the market. Things are still pretty gloomy for real estate companies. There's been some certain high-profile cases. It's clear that property prices are still sharply lower. It's not the resale market is not there. Selectively, maybe some companies are doing well, and you've seen a lot of spike in some of, which to me means that the markets are looking for new ideas and looking for stocks or sectors which are not in favor, and hope that there could be some short-term momentum. So you've seen, as I said, a lot of these stocks have moved up. I think some of them without any real change in the fundamentals. So if you're a trader and playing the momentum, that's fine. You can get in and get out quite fast. But if you think there's some significant turnaround in the fundamentals, I don't see it. And people I've spoken to, certainly in the NCR region, don't see any fundamental change in their balance sheet for the next coming 2 to 3 quarters at least. So any significant rally for me would be an opportunity to lighten up and maybe short sell at higher levels.
Mayuresh, what's your call on real estate?
No, largely I think with the implementation of RERA and the new regulator coming through, compliances will probably increase, and that probably has a paradigm shift from the unorganized sector to the organized sector and the listed players in general. Largely, again, I think if you look at the kind of management commentaries that were there for the last 2 years, they're probably just barely able to meet their guidance in terms of the top line growth as well as the kind of square feet sales that they were able to do. And again, I think if you divide the country into 4 large zones, I think if you look at the north part of the country, I think the supply still remains extremely strong. So I think realization improvement and debt deleveraging probably is one of the key aspects that these companies would probably look at. Western-based companies probably better placed in terms of expected realizations to go up. And again, the kind of land banks they're probably sitting in, much lesser debt on their balance sheets selectively. The South-based companies probably more dependent on IT professionals. But again, I think as the trend is evolving, more office let-out spaces coming through as manufacturing activity is improving by the day. My own sense is that companies which have a diversified model out of the south, which is a mix of the annuity-based income, which is a mix of residential income, I think those companies probably will do well. But the process is going to be very, very slow and gradual, Pankaj. The new launches that they're doing have been extremely slow over the past few quarters. The existing sales that are probably happening and the velocity thereof, I think the receivables will punch through in a particular quarter in this fiscal, and that will have a huge bump up in terms of earnings on a year-on-year basis. So from an earnings perspective, I think the gradual recovery in the real estate sector is expected to come through as the real estate bill probably starts getting implemented and has a huge positive say on the listed players. But largely, again, I think one must remain extremely selective. So I think I'll remain focused more on the south-based players and the west-based players rather than the north-based players at this point of time.
Right. Sajiv, as far as Rbl Bank is concerned, anything that you can pick up? The stock is going up every day. Don't you think it's getting to the valuation beyond something like a IndusInd Bank or a Yes Bank, which would be the benchmark for it?
Been very bullish on Pankaj as a disclosure. We've been recommending it and we own the stock. Yes, you're right. It's been moving up and maybe a bit too fast, and it is probably a bit ahead of fundamentals. If you look at the valuations, it's certainly not cheap. It's more expensive than some of its larger banks. The advantage is that it's not in the futures and options means you cannot short sell the stock. So if anyone's got they can only sell what they have. They can't take a fresh short unless it's intraday. When we talked about the stock when it was around 350, 400, a lot of people thought that it could not be the new Yes Bank. But I think there's a talk now that maybe it could be, and it could be a multi-bagger of 3 years. So certainly there's a lot of momentum. Valuations are stretched. Results obviously will have to be very, very good to justify those higher valuations. But as a holder of the stock, I would look to probably still buy on the declines and not lighten up. And I think you could see price of 600-700 over the next few months quite easily. Momentum that is certainly probably ahead of the valuations, but people are willing to pay a premium for another bank which they think could be a multi-bagger over the next 2 to 3 years.
Right. Sumit, do you have enough history for RBL Bank to tell us how it is looking on the charts?
Charts are not that long, but overall, looking at the sector, it seems that we can see a good momentum. In fact, we have already seen a good momentum, and in next couple of months, we can see a good move too. As far as levels are concerned, there is a possibility that from here on, we can see a rally of around 10 to 15% in RBL Bank. In fact, most of the banking stocks are looking good to me. As far as your question on RBL is concerned, this is looking very good, and on higher side, immediately there is a possibility that we might see a move of 40 to 50 points. That means 600 levels on higher side. I think any dip in the RBL Bank from present levels should be used as buying opportunity, and those who have taken long positions at lower levels in last couple of weeks, they should hold on the existing positions because the stock is looking good, and on higher side immediately we should see 600 as an immediate target in RBL Bank.
Right. Mayuresh, what do you make of the moves that we are seeing in some of the metal stocks, both ferrous and non-ferrous? While in the most recent consolidation, they corrected but didn't fall a lot. Now they're facing a lot of resistance at higher levels. Do you think this consolidation will be good for the metal counters? Do you think from here on they're headed higher? What would you do with leading names like Hindalco, Tata Steel, JSW Steel?
No, phenomenal year for the metal companies, both ferrous and non-ferrous, Anisha. And I think the moves that the government did in terms of MRPs did boost the domestic consumption. Secondly, I think if you look at the dynamics with the Chinese smelters shutting down, that has a huge say in terms of how the LME realizations panned out for metal companies, specifically prices like aluminium, zinc, copper moved up significantly higher on a year-on-year basis. Though I think you've seen some blip in pricing, and the commodity demand-supply dynamics has a huge say in terms of how the pricing will move on the LME as well as the inventory levels, specifically in terms of how the Chinese demand-supply dynamics will move. My own sense is that the kind of numbers that they've probably reported for FY17, I think the performance can very well get repeated into FY18. So whether it's ferrous or non-ferrous, my own sense is that with capacities probably going up, specifically in the Indian context, and end demand coming through, I personally perceive that companies like JSW Steel, with their value-added product share going up to 37-38% and the only hitch there would be that they should not probably be doing excessive acquisitions because they're keenly focused on deleveraging their balance sheet. So this is something that I'll still continue to hold on. On the non-ferrous space, Hindalco has clearly been reducing his debt. Novelis has been reporting strong set of numbers with the auto line commissioning happening and with expectations of 25% of Novelis contribution coming in through the auto business, which is a higher margin business, and with the kind of debt reschedulement that they've probably done, the interest repayments will be far lower in this coming fiscal. And with smelters running at full operations on the domestic side with full accessibility to both coking coal and bauxite, the cost optimization should play very well on the EBITDA per ton basis on the domestic scene as well. So if I have to pick and choose, my own sense is that JSW Steel is a clear hold from the ferrous space. From the non-ferrous space, Hindalco is something that I'll still continue to like, optimistic about, and again, a clear disclaimer, we might be holding these stocks in our funds.
All right. Sumit, amongst the tyre space, we've seen some buzz and we've seen the likes of Apollo, CEAT move up well. Do you have any picks there in the tyre stocks?
Yes, absolutely. Tyre stocks are looking good to me. In last couple of days, we have seen that the stocks has given a good move. As far as trading bet is concerned, I think one can initiate long positions in Apollo Tyre at CMP. No doubt the stock has given a move around 30 to 35 points from lower levels in last 10 to 15 days time horizon, but still the stock is looking good to me. It's trading about 200 DMA. We have seen a good move, good volumes in the counter. Looking at the structure, it seems that we can see upside move till 225, or even we can see a move till 230. We can see a move till 235 levels in next couple of weeks. I think for a trading perspective, one can initiate long position in Apollo Tyre at CMP. If there is a dip of around 4 to 5 points from present levels, then that should be used as a buying opportunity for the immediate upside till 225 levels in next couple of days.
Right. Let's also just look at a call which is coming from CLSA. This is from the technical team, not from the fundamental team, where Lawrence Belanco, technical analyst at CLSA, says that upside targets for Nifty can be as high as 10,350 to 12,000. This is the range that they believe can come in. Nifty to continue to break out from a new all-time high and will hit further all-time highs. Since December 2016, India has become a global and a regional leader. So if you would look at the chart of MSCI Asia, you would look at the chart of MSCI World, India would be leading the run over there, or the flows over there, or the return over there, and that's why this run would continue. Sumit, any view on these targets from CLSA technical team? 10,350 to 12,000 on Nifty. Is it possible, and will India lead MSCI Asia and MSCI World in terms of movement?
Yes, absolutely. These targets are possible. If you remember, we had given a targets of around 10,000 in Nifty soon. We are expecting targets of 10,000 in Nifty in next 3 to 4 months time horizon. Nifty has given a breakout above 9,000, 9,100 levels after a long time. This says that the overall structure is bullish, and on higher side immediately we will see a Nifty in 5 figures. 10,000 will be the immediate target for Nifty, which we can see in next 3 to 4 months time horizon. That means there is a possibility that we might see levels till July or August itself, and overall we can see levels of around 11,000 also. In short term, there is a possibility that we might see a dip of around 200 to 250 points in Nifty, but these dips in Nifty should be used as buying opportunity, because overall structurally, this structure is looking very good, and the breakout which you have seen above 9,100 levels, this says that from here on we will see a move around 1,000 to 1,500 points in Nifty. So I think the structure is good. All dips in Nifty should be used as buying opportunity for next 3 to 4 months time horizon.
Thank you so much, gentlemen, for taking out time for us. Always good to get a perspective from you. Just before we go, Sajiv, let's start with you. Any disclosures?
Standard disclosure I've recommended. Certainly, we would advise clients, and I could have positions myself on the long side.
Mayuresh, disclosures for you?
Pankaj, the stocks we've discussed, I do not have any personal holdings, but it is possible we've discussed these stocks with our clients, and we might be holding these stocks on behalf of our clients and our funds.
Sumit, finally, disclosures?
Yes, absolutely, Pankaj. We have discussed many stocks on NDTV profit, especially the frontliner stocks, and also the trading calls which you have given here. We do share the same view with our clients on regular basis. So it's better to assume that our clients might have position in all the stocks which you have discussed over here. Thank you very much.
Thank you so much, gentlemen, for taking out time for us.